Like if I was a teacher, I'd let us just like take you outside. Makes
Oh,
sense?
and do what?
Nah, just like you're outside. You're gonna sit outside. Like no,
Oh, you're
not
gonna
and
fuck
what?
me?
No.
Siéntate afuera.
Damn it.
Siéntate
Alright,
afuera.
Hell
whatever.
no.
Alright,
Hell.
whatever. Alright, bet. Let me get into it. Okay, so for open today, what I was watching is we're open up in accumulation. So there was a chance that I was not gonna really get into a trade off of open, and just sit out waiting for the 10 o'clock news to come out. We had news at 10 PMI, right? And so what I was looking at into today was on a higher time frame. Okay, price did look like it wanted to print higher. And so I was definitely going to be cautious of any type of impulsive move off open. What I was mainly watching for was obviously, that this orange level that I called out in pre-market, but also for extra confirmation, I was looking at the mean. So if we were going to get the impulsive move to shoot us higher, then we would be showing support off of the mean, and then that would then be worthy enough to take the trade. But as far as session pattern that we were forming today we were clearly going for a search and destroy. And so as we can see, pre-market data, we have lows and highs, and we have formed a pretty tight range. So what I was looking at into open is which side does price want to run for, whether if we run for these equal highs right over here, or we run for the equal lows down here, right? So it's going to be either or. Um, but so also at this area we had the equal highs and the imbalance, and so we know that price is super magnetic towards that. So when I saw that, definitely, like I said, cautious of an impulsive move to the upside, and then seeing if that move is going to really continue based off of if we show support off the mean. Um, the easier setup into open was if we come up to these highs and then just dump sweep. Wasn't really expecting that because that's the easier setup. We don't normally always get the easier setup. We usually get like the harder move. The harder move would have been we just ended off bumping through here, and then we could have came a little higher, swept these highs right here, and then potentially went short later on. The level like I said, I referred to the orange one. This was going to be our way of measuring if price is weak, if it still remains weak, or if it can be, looked at as strong again to, head higher. I got this level from the 4 hour. Normally I get it from the daily chart, but the daily chart we had way too many wicks, way too high above price. And so what I saw here on the 4 hour was these candle opens right over here, and there was a couple wicks. That's where I got the level from. And so obviously, it would correlated with a fractal level that I was looking at. And on the hash marks on the side of the fractal, right? Those black lines, and it also correlated with price in pre-market, right? Let me go to yeah. So it correlated with the price in pre-market. It was around the pre-market highs. And so that's why I was like, all right, it's a worthy level. Definitely going to be watching for this. This will be our way of indicating, okay, is price still weak? If it can't break above it, it is still weak. If it can start getting closes above it, then we can now look at as prices being strong. So this is like our pivot for today. Also around this area, we can clearly see we had a mitigation zone, right? Pretty fucking simple. Also had that imbalance that I was talking about. So combining a bunch of different things here, we also had slapped um a, I believe 20% at this area right over here. It's another good confluence, right? Just a bunch of things, right? All different types of confluence, like SMC confluence, order flow, fractal. So just a bunch of stuff, combining all of that together and, creating that high confidence setup. But more importantly, before, we have that, we still got to wait for, the needed reaction off of that level. So I didn't take the first entry once we first tapped into it. Obviously, like I could easily just try to top tick or bottom tick everything, but the way that I like to get into my trades is I like to have full maximum confluence and security to avoid me getting possibly stopped out, and to also just know that I can, hold my trades a little longer. So really what I was waiting for was a vector cross. So fortunate enough, the vector was very close to price at the time right over here. Normally when we do have a short setup or something, vector is pretty far away from price, and then you would wait to see if it does get that full on break. If it does, then we know that shorts can keep going. In this instance right here, we had vector pretty close to price, right? And so really what I was watching for was just to wait for a break of the vector. Unfortunately enough, what happened here into open is if you didn't have a respectable stop loss, then you most definitely got stopped out. And so this honestly shows a really good example of how to go about your trades. If you have a lot of confluences, then at the area that you get in, you have to have a respectable stop loss and then actually follow it. Because if you just let yourself get out of the trade, you stop yourself out and it's not a proper stop loss, then you're going to see yourself getting stopped out of a, worthy trade. And so obviously, that's good to say in hindsight, obviously now that it went, but this is, just to avoid this happening from now on. And so if you did take that early entry, right, let's say you took it, reasonable entry, obviously like nothing down here, why would you be getting on, any type of lows? Once we see that displacement, like I always say, I love to get in off of a retest of displacement. And so this move right here is not really making me feel any type of FOMO, because at the end of the day, we can have a dump like this, V shape, and then chop around. It's not going to be a true move unless we come up into this displacement, hold it, and retest, right? So understanding that price doesn't just leave without you. It's never just going to go bleed and then die and then never come back. It's never going to do that. Price is always going to try to stop out the side that is right. Okay. And so you can always count on that to play the retest. You can always count on the fact that price will come back, whether, as many times as you think it won't. No matter how hard it falls, it's always going to come back and give us a retest, no matter what. And so knowing that, now you can wait for the needed reaction off of the area and then get in off the retest. And so any of these retests right here, whether if it's this first one off this wick or even this second one, which was perfect, any of these, right, entering off of this retest, if you had a respectable 15-point stop loss, this top tick only went to 19, it would have never gotten hit. So if you got in around here, 12, your stop loss would have been at 27, right? Never would have gotten hit. Okay, it was far up above here. Your stop loss was far up above here. This would have never hit it. And so that's why you have to make sure that you have proper risk management. And that's why being sized in the reasonable amount is very, very important. So this is only possible with just one con, because a $15 stop loss would cause you to lose like $200, which is very good risk. If you can lose $200 every single trade, then that's perfect, because at that point, an average win is like $500. So that means you can lose twice to make up for one win. So it's pretty good, just knowing that. This is really good for confidence with entering a trade, because if you go into a trade expecting to lose it and knowing that even if you do lose it, it's only going to be a $200 loss, you will get rid of the whole scared to enter, or like, just fearing of losing money, because at the end of the day, that your risk management is on point because of your 15-point stop loss. And so now okay, well, if I do lose this trade, I'm going to lose $200. So you can go into every single trade expecting to lose $200, right? Like reverse psychology, thinking, all right, like I'm just going to lose $200. And then it ends up going in your favor. Now it's at minimum a $500 win. It can be up to a $1,000 win, 1,500 to even 2,000 if it goes crazy, right? And so, yeah, so like it ends up playing out, and unfortunately, it does go for a second retest, which only happens because of the aggregation time. So this is a classic move. Price always does this when we have a predominant trend, and I said this during the live call, and it was just super clear. The way that we pulled back before aggregation, okay? So we have aggregation. Obviously, like, it's very important to wait until aggregation hits to decipher a direction in the market. And so with this right over here, right, price looked like it was going to really break. It came down to areas um where we broke. And so at that area, it's like, okay, we should get the momentum now because we broke the levels needed. There's really nothing that should hold price, and not make it just break through all of these, like, support areas right over here. But what ended up happening is we did get that pullback. And all I was looking at into aggregation was, okay, if this pullback can get cut short at this imbalance and, fall back below vector, then I will enter short. And so with that 10 o'clock candle, all I really need to see is, okay, if it gets back below vector, then we can enter short, because now we know, okay, it's definitely going to just die, because if it gets back above vector, just to get slammed back down, it is now going to obviously not just go for rule 2, but finally actually break whatever low held price. So that's exactly what it went for. It did it immediately. Luckily enough, it even had a crazy break and retest to where we broke, came back into the same area where we previously held support, and then rejected. So price today, it's like gave us so many reentries for this. Obviously, there's the first reentry, and there's the second one. Normally, it really just depends on the type of trader you are. What you could do is get in, get out, and then see if there's a reentry, get in again, get out. Or you could also just be the type of person that has the respectable stop loss. You TP, like if you're trading micros, you TP, take half off at like where it's worthy, and then you let the rest run, and you don't cut them unless they go back to break even. So then those runners end up running, and you're able to hold throughout the whole trade. It really just depends on the type of trader that you want to be. Either or would work perfectly fine, and priceless gives you a shit ton of re-entries. And so we end up keep dumping. We go for the -2 deviation, which was surprisingly enough. Haven't really seen that in a while. -2 deviation was actually here, so we did break way lower than that -2 deviation. And so once we ended up seeing that, all I needed to see was price um going back up above -2 deviation and showing support if I was going to play a V shape. So really at this point, once we reach that -2 deviation, it's so free, because like all we're doing is just waiting for a price to catch support and then finally show that support. And to me, it's never going to actually finally show that support until, one, we're sitting pretty above the vector, and then two, starting to show support at a deviation, which we did right over here at the -2 deviation. Actually, my fault, right over here we did. So it was a little far into this. Nonetheless, it's still, like I said, a more secure entry, and also just guaranteeing that you will enter into momentum and not get stopped out. And so yeah, this was really good. Down here there was also a 10%. Obviously, like there's a lot of confluences to be able to even bottom ticket, right? Like we had an odds right over here. We could see this nice imbalance where we just bounced perfectly off of as soon as we tapped into it. And then an early entry would also be when price went for its rule of 2. It failed to break the rule of 2, and then price ended up showing clear signs of support. We also ended up getting not the cleanest inverse here, but we can see previously bearish. We got that displacement to the upside, came back into that same area, ended up holding that, and then we push higher. And so yeah, very clean V shape. It's just super clear. And so what else was I looking at? I believe that's it. Honestly, I don't think there's anything else to say about it. It's a pretty simple day. It's just like playing those shorts off open. Finally we saw ourselves go to the -2 deviation. Haven't seen a -2 or +2 deviation in a while, so it's pretty good to have a move like that. And then just insane that we ended up V-shaping way, way, all the way back up. This is pretty crazy. But also another thing was, since open was accumulation, this was manipulation. We ended up manipulating and then playing into the distribution quarter, which we ended up pumping. And then we have X, which was continuation. And then we ended up manipulating for the last quarter of the day, which I don't end up trading at all. Not relevant for me. This is like dead zone hours, so like there's literally nothing going on. I don't tend to trade price after 12 or 1 p.m. After 1 p.m., I don't really be trading. So yeah, there's nothing to talk about here. That's pretty much it for today. Any questions?
How do I get that vector line on Training View?
Yo, Dino really left. That's crazy.
Yo, you can hear me?
That's just crazy. Yo, Knox, are
Yo.
you talking or not? It
Wow.
says you're talking. Oh,
Chris is talking.
Who's
Yeah,
talking?
I was. How do I get the vector
I don't hear
on
him.
the for Trading View? Like,
He's
Oh.
asking
You might
how
have-
he gets the vector, bro.
Wait, how did you
Really?
guys hear him and I didn't hear him?
You have him muted, probably.
Why would I have him muted? What the
I
hell?
don't know. Right click his profile or his name. See if the user volume is turned up. It's
Alright,
Chris.
well,
yeah,
Alright, what's-
Chris. Or, I
what's
don't even
up?
know what it is, bro. Yeah,
What's up?
for the vector, is it only for Thinkorswim? Like, I see
Yeah,
that
it's
on
a
Trading
Thinkorswim.
View, but
It's only
Thinkorswim.
for Thinkorswim, unfortunately.
oh yeah, okay, all right, yeah, I wasn't sure about that, but all right.
I do recommend you use Thinkorswim though. Like most people don't use it because they think it's overwhelming and it's not user friendly, but it's not hard at all. Like it actually is pretty simple.
Yeah, I got an account with them. I just opened it recently, like a month ago, but I never actually went on it because they do
Yeah,
look
I
kind of
know.
weird.
I know. I was the same way at first. Like I didn't want to use it because I thought it was like not looking good.
Yeah, exactly.
But
Yes.
it's not bad though. Trust.
Yeah, I'll get into it. I'll take a look, get deeper into it, but appreciate it.
Valid.
Got a little question. Hold on. Where did you mark the mitigation block? If the red box is the mitigation block.
What is it from? Time frame?
Yeah. Like where was it on the chart?
Let me show you. 15-minute. Right here. This.
Uh,
You see?
you chart most your PDAs on the 15-minute?
All of them. Except for
What
levels.
about the orange level? Like
This
you
one
get it
was
from
grabbed from
dailies.
4 hour. So normally it's gonna be the daily, but today's daily was so like, look, there wasn't much shit going on here. And
Mm.
so
You mark the open or
I normally I like to do the open to the candles if they correlate. Like in this one they correlated right here, you see? And then there was also a wick here. So it was better on the 4 hour, and then there was this wick here. So there was more to see on the 4 hour than the daily. The daily was just kind of like, there's all these wicks up
Right.
here, and then it just wasn't as clear. So I refined it on the 4 hour, but then I always, like I said, correlate it with the pre-market data, as you can see. Yeah, these equals high here, and then always want to make sure that you back it with the fractal.
You didn't use market profiles for this, like New York reversal or search and destroy type of stuff.
No, I didn't use the market profile for that, but we did, like I said, we were looking like we were going to form a search and destroy based off of the way that pre-market data looked. And we did.
Alright.
We went for the high, and then we just picked the direction. So yeah.
Yo,
Too
Joe.
much. What's up? What's up?
Ton is asking, what is the rule of two?
Yeah, so the rule of two is basically understanding that you always have two chances to sell. When you're in a position. So the first time, so here, let me give you an example right here. Perfect example. So you always have two chances to sell. You either sell at the, original top, right, or bottom, or which we ended up forming a lower bottom anyways, but this still plays out really well. We end up forming the original top, right? And then price pulls back. So what ends up happening is people, they they don't sell the first time, right, at the initial peak, and then they see that price pulls back, and then they just panic sell, which ends off taking a lot out of the table. Like, they miss out on a lot of profit compared to if they just wait for the rule of two, understanding that price gives you two chances to sell because it is going to revisit that low or high again and give you a second chance to sell it, to where that second chance is like the determining factor of, is price really going to break this low, or is this really going to be the low, right? And so once you see if it gets back above, now you know price literally just gave me like the rule of two there. I was supposed to either sell, or just keep holding. But once you see that it's like, all right, clearly the rule of two already happened. Now you know, okay, I can get out. And this is really good for just like holding your positions, and also like knowing when to enter them. Because if you watch this low get put, okay, you wait for the rule of two. Like I'm not gonna get out in unless I see the rule of two play. Rule of two plays, now I can get in with more confidence. Um, I say the rule two happens 90% of the times. Like very rarely you'll get a high and then we never visit it again. That's so rare. Like where we just come up and then we just drop immediately and then we never see it again. That's very unlikely. We always get a rule two. So why do I hear myself?
Um,
I hate the echoes, bro. But yeah, no, that's basically what it is. Does that make sense? I hope that makes
And he
sense.
said yeah.
'cause
He
that's-
said yeah.
there's someone asking a question. Let me just check it. He said, my question is, how do you get the vertical lines for TradingView, and where do you specifically place them for AMDX? The
Wait, where
lines
did he say that?
on chat, lounge chat.
Oh yeah. So these, I'm assuming, bro, it's right here on the vertical lines. You just mark them. And then where do I specifically place them? The times are right here. So the way I do it is completely different from everyone else. 9 o'clock on the dot. You start off at 9 o'clock on the dot, 9 a.m. Eastern. Then after 9 a.m., every other hour, up until 1 p.m., right? Which I forgot to mark today. Well, actually, yeah, I forgot to mark today. But yeah, up until 1 p.m. because that's the last relevant aggregation. So you mark 1 p.m. And before 9 a.m. every other 2 hours. So 7 a.m., 5, all the way 3 morning, and all the way back, right? And so yeah, it's how I mark the times. And then to find the profile, you gotta just read, the price action compared to each other. Follow the pattern, follow the profile, whatever makes the most sense, and then you look into open to whatever makes the most sense. It's like, all right, at this point, right, we can see, from following the profile that this is an A, so we're opening up an accumulation. So that's how I'm able to tell before price action even forms what quarter we're in. Type shit.
Yo, Joel, I got another question. Is a vector cross or retest like mandatory for you to like enter a
Yes.
trade? Yeah.
Yeah, like retested to it. Hell yeah, because that's exactly what I was waiting for. Because what happens a lot of times is the vector will cross below it, faking people out, like making it look like it's going to like go get a breakout to the downside, and then it just comes back up, and then it gives us a what I call green red green, which is a buy signal. So to avoid that, the vector breaks, and then you wait to see if it actually shows. Like you give it a chance to come back up to the vector to retest it, and then if it rejects it, then okay, I can go short, which is exactly what happened today. So it's
Yeah.
perfect. Yeah. But with most short setups, you're gonna get in before it even gets the vector, because as I realized, I wouldn't say the better short setups, but most short setups happen because we're already so high up from the vector. So well, basically what Price is just doing is coming back to the vector, right? And so to substitute for not just getting in off of a vector break, I use the linear regression. So if we get a nice linear regression break, play it the same way like if I was playing a vector. Yeah.
Shit.
Shit.
Sure. What's up? What are you laughing at?
Yo, Scav, time me out. Get this motherfucker off the staff, bruh. Get this guy off of the staff. Fucking